Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 100 of the AJ Brown Show. AJ, can you believe it?
I can't believe it. I didn't think we'd get past episode 10 or 15 when we started this endeavor. Who knew there was so much to talk about when it comes to options?
Especially when we start talking about your style of trading with the premium selling, where you use it as an income builder. But the world has shown us that week to week there's opportunities, whether the market's going up, whether the market's going down, and whether the market is going sideways. Today is a bit of more of a special episode. We've got a special guest on with us, which we'll bring on after our commercial break. You've been working on some new software, which is really exciting because that's kind of where the world is going. So we'll be unveiling a little bit of the software, and we'll go through your pick of the week and some of the speed round questions, and hopefully educate the world on trading trainer, trading premium, and making money in this wonderful world of investing. So with all that being said, let's dive into what's going on with the markets. I feel like today's big news is inflation related. And is that what is weighing on investors' minds today? How are we reacting? What are your thoughts?
I mean, this whole week has been characterized by what I like to call hearsay. I mean, there's been different Fed presidents being hawkish. There's been a tick down. Well, let's go back to the economic calendar. So everybody's, was pointing to new home sales on Tuesday and how perhaps there was a tick down, right? Because they were expecting 700,000 and they got only 675. But people are forgetting to look that the prior number was reevaluated and it went up. So people are so focused on what's been happening like this month that they're not paying attention to the overall big picture. And that's a common thing with investors and traders alike. They often don't see past the tip of their nose. And I'm always warning our program participants to pull out from the picture, to zoom out and see the whole thing. So, there was a lot of hearsay around new home sales. The other one was the GDP numbers. Well, the GDP numbers came in pretty strong. How about consumer confidence? On Tuesday, consumer confidence also, you can see here they expected 106, 105.8, and it came in only at 103, and everybody started ringing the alarm bells. But don't forget that the prior month in August, they reported 106, and when they revisited it, it was closer to 109. So, again, people are looking not farther than the tip of their nose. But again, taking a look at what happened during those days, it just continued with that sell-off that started last week when the Fed came in after doing absolutely nothing with their policy, came in with just some rhetoric being negative. But then again, we had Serge Berger on our 99th episode, and he even came and talked to our group this past Wednesday about some different patterns and some of the algorithms that the big money traders use. And he pointed out this one pattern right here, which is a hammer candle followed by a follow-through day. And sure enough, his pattern came true, because now we're seeing a temporary rally in the market. And so, we're just going to keep following with what's happening. I think one last thing to point out, Sip, is I'll look at the GDP numbers on Thursday. They came in, this is the final. Remember, GDP is reported every month, but they take a look at a quarter and they do first their advanced look, and then they go back and they revise it, and then they call it the preliminary, and then the final. So this is the final look at quarter two. Next month, we're going to get the advanced look at quarter three. And they didn't really do anything to the GDP numbers. But if you take a look at the personal consumption expenditures index, you can see they almost halved it. That's basically kind of a measurement of, what is the inflation going on in Q2. And then we got further looks at that when we take a look at today. Today is the all-important personal income and outlay numbers. So I've been scrutinizing these things all morning. And so let's take a look. So personal income, 0.4% as expected. If you take our calculator, 0.4% times about 12, that would be 12 months in a year. You get that annual number. That's what, 4.8, something like that. That's still higher than the Fed's 10%. But at the same time, looking at the expenditures, that's at 0.4. It's a little lower than expected. The price index, 0.4, a little lower than expected. And then looking at the core price index. So this is where they factor out all the volatile fuel prices, right? Fuel prices have been going up, but fuel prices can be quite volatile, and food prices, which are also volatile. And take a look at this. It's at 0.1%, below expectations. 0.1% times 12, 1.2%, right? So I know that this is 3.9%, but we've been having such a slide recently. I mean, this is kind of a little breath of fresh air, saying that perhaps our inflation moving forward is actually below that 2% level. We'll have to see how this plays out over the next couple of months if this becomes a trend. But if that's the case, we actually had the Chicago Fed president yesterday evening be quite dovish with the comments. And that was after, the president of JP Morgan being quite hawkish, saying that the Fed would probably have to raise rates to 7%. This Fed president was like, hey, I'm involved, and I don't think that's actually true. And then the PCE numbers came out today. I mean, I'm not saying that there's not a lot wrong with the economy and that we probably fundamentally will see more slide in the future, but I think we're setting ourselves up for maybe a temporary rally, and that's the numbers are giving us some good news, seeing as how the
I've
market
got
is
two
all.
questions for you from this, AJ. Two questions.
Yeah.
One, I feel like I don't believe these numbers. I feel like they don't truly represent the market and the inflation that the everyday consumer. And so, is there another thing that can indicate inflation other than this report that is worth looking at? So that's question one. Question two is oil. Oil continues to get close to that 100. And is that not baked into the inflationary numbers as well?
So so the Fed makes its decisions and it tries to factor out anything that's quite volatile. So this actually bakes in this number right here, this higher number, both of these, to be honest. This bakes in what we're seeing with food and energy and anything that tends to be quite volatile, right? And so the Fed, and I'm contradicting myself because we just saw the Fed do something unusual and raise rates by like 5 points in less than a year. But the scoop is that the Fed typically doesn't like to factor in food, because food can change just on a whim, like if there's a windstorm or something like that. And they don't like to factor in oil prices because oil prices are controlled by, so they actually like to pull that out when they're making actual policy decisions. Now, so when we, as some of our biggest purchases every week are fuel and food, so we're seeing some of those high numbers, but the Fed is saying, hey, I usually don't want to factor those in because those things change so readily. So there is another report, of course. It's called the Consumer Price Index. We'll get that in about 2 weeks. But this one was actually created in response to a request from Alan Greenspan back when he was the Fed chair. And this one is the one that, reportedly gets most of the focus by the Fed folks, the people that make the policy decisions. And I think that as far as interest rates are concerned, this is actually positive news for not raising rates, at least at the November Fed meeting. In fact, we can take a look really quick, Sip. I've got it right here.
The likelihood, right? The likelihood of a rate hike.
Yep. And so let's take a look. Yeah, see, the numbers have gone down. If you take a look at what it was a week ago, it was more like 28% said that there would be a rate hike in November, and now that's dropped down to 17%. So the consensus is that the Fed's going to hold steady in November. This is the November 1st session that's coming around in about a month.
All right. So then we've got all this news that has come out this week. Let's jump to the S&P real quick. Maybe visit the VIX. What would you be advising viewers and or your participants as to how to look at the market and what to expect? Probably the beginning of October, maybe.
So October tends to be the month. September is always a crap show. And we've seen that. Now, October is when kind of saner heads enter into the markets. And then towards the end of October, we start to see the beginning of the holiday rush and seeing what retail sales do. With that said, about 4 days ago, so on Tuesday, we reached a short-term low. And since then, we've been doing a little bit of a rally. And we're waiting to see if this low from last Tuesday actually is confirmed as the low. Now, one of the things I like to do is take a look at the 3 and 5 day EMA. And you can see here, it hasn't yet confirmed. It'll confirm when this line crosses here to tell us that last Tuesday's low is the low that we should clock in. But as you can see, this movement from the high close on September 14th to this low close on September 26th, this is called a range expansion move in the down direction. And you can see, based on it landing in this green era, it identifies an ideal downtrend. And so what does that mean? Well, an ideal move followed by more ideal moves really gets investors and the people who control the big money into believing that it is a downtrend. We're not there yet. It hasn't matured. This is the first of those ideal moves. We would need to see a retracement, and we can start measuring it once we clock this in, but we would like to see a retracement somewhere to the halfway mark and then another down move for us to actually start buying into the downtrend. As far as I'm concerned, what I'm telling my folks is, again, zoom out, see where we actually are. And if you look at where we actually are, we're just in a lot of sideways chop caused by the month of September and caused by the summer doldrums. And what better to do if there's sideways chop but dig into your options tool chest and look for option strategies that work best with sideways chop. You're not going to be able to do this if you're a long-term investor or if you're a directional trader, but if you've got that options tool chest, you can turn this into some nice, handsome incomes, some nice, handsome profits.
All right. And that's what we'll dig into a little bit more. Once again, episode 100. Looks like we've got a good amount of visitors watching us today. So welcome to all the new viewers. We are streaming live. And so that means if you do have some questions on some specific tickers or you have a comment or two, feel free to drop it in the chat. We'll see if we can get to it. Otherwise, we're going to take a little break. But before we do, I want to give everyone an opportunity who hasn't checked out AJ's wonderful daily workshop, an opportunity to check that out. So I'm going to go ahead and throw the link to this in the chat, and we're going to take a break. We're going to talk about the value of using options in a looks like very choppy market. We'll go over some strategies. We'll bring on our special guest to give us some insight to that as well. Otherwise, we're going to take a short break. We'll be right back, and sit tight.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So sideways chop, sideways chop, sideways chop. I keep seeing that in the markets. And so, AJ, how can we as investors take advantage of that using options? I'll get your perspective, and then we'll bring on our special guest to double down on that, and we'll continue the conversation.
I mean, options, of course, are these tools that we call derivatives. And these tools, when you combine them, so people, when they think about options, if they have any sort of insight, they think about just calls and puts. And they're like, you buy calls when you're thinking that the market's going to be bullish, you buy puts when you're thinking the market's going to be bearish. But there's way more to it, right? The options have expiration dates, options have strike prices, and depending on the expiration date you choose and the strike prices you choose, you can have one call option that behaves completely different from a different call option. And knowing how to pick those options, how to pick those strike prices and those expiration dates, as well as combining them into different strategies, you could basically make any pattern that you identify, not just in price charts, but in volatility graphs, in time charts. You can make any pattern that you see something that you can profit from. So it's basically, options allow you to take, rather than having 1 or 2 tools in your tool chest, maybe you have a tool that profits when the market goes up. Maybe if you're lucky, you know how to short things and you know how to profit if the market goes down. But when you start to have options in your tool chest, I mean, it opens the world to being able to profit on 27 different patterns, actually. And we like to focus here on the sideways choppy patterns because those are typically associated with, boring stocks that are not in the mainstream, but we can collect dividends on them. And then we can also collect this, what I call an instant dividend, which is from selling options. So that's another thing, options open the door.
Yeah. And we've been saying that, preaching that since day one. We have been talking about the power and the value of options premium selling for 100 episodes. And
oh my goodness,
with that, I mean, let's bring on our guest who we had on our 50th episode to maybe shed a little bit more light onto this concept, because coming from 50 to 100, we've had a good amount of new traders, new investors, new participants come in. So with that, let's go ahead and bring Coach Jay back. Coach Jay, welcome back to the AJ Brown Show. How's it going?
Oh my gosh, I am flattered to be here on episode 100. This is fantastic. Congratulations, you guys.
Coach Jay is one of our top-notch coaches here at Trading Trainer. So when somebody comes to be handheld, even when somebody comes into just the regular program, the 6-month study program, Coach Jay is often somebody that they'll get welcomed by. So Coach Jay is like my right-hand man.
Well, thank you. It's fun meeting all the people when they sign up. Some people don't know a thing, and seeing them progress from not knowing what an option is to be able to talking and conversing about exactly what it is: intrinsic value, extrinsic value, and expiring and making the plays. It's really great to see that progress.
And you know,
And then,
Sip, Coach Jay, it's funny, we were talking about this yesterday. You know, it took me almost 8 years of a lot of trial and error, and almost, I don't even want to talk about the amount of losses. I mean, I could have purchased a couple homes for the amount that I've lost during that 8 years trying to figure out how to use options. And Coach Jay, you know, we have some clients who start from zero, and what is it, like 3 or 4 months? You've got them going at like the highest speeds, Coach Jay.
oh, they're just absolutely fantastic. They, uh, yes, the program is great for teaching them, but they also had a tremendous amount of commitment, and that's where a lot of the success comes here. Is you have to have the commitment to be able to. It's going to take some time. Trading Trainer doesn't just give you a tool. It's not a little switch that you just do and poof, you're a trader. Trading Trainer teaches you a skill and teaches you how to be independent and do it on your own. And that's a real key component. And to be successful with that, it takes commitment on your part as well.
Yeah. Yeah, we've said that a lot on this show, that you know there's no red or blue pill. You can't just give us a certain amount of money and I'll ship you a pill, or I have a magic switch over here that I can flick and you're automatically a trader. But at the same time, you know, we've streamlined, and with our tools, you know, we can come down to a pretty standardized process that you can do in just a short amount of time. It's just adopting that. It's kind of like learning a new skill, right? Learning even a new physical skill. Like you don't just go to the gym on day one and all of a sudden you're you know, have a pump on you that, you know, can impress all the folks at the local beach. The scoop is you've got to work at it for a while to actually, you know, wrap your head around it.
So, Coach Jay, I have a question. What are some of the reservations that maybe new investors or investors who haven't tried options? What are maybe some of the like ideologies or things that are their assumptions of options that kind of prevent them from taking the leap? Because that's what a lot of our viewers, new viewers, are. They haven't used options, and so I'm curious, how do you convey to them their value and, you know, make this argument for using them?
One of the biggest problems people have coming into the options world is the vocabulary. The vocabulary, there's so many things you can, you have a call, you have a put, you short an option, you write an option, and there's all these different terminology. One of the things I encourage people to do is start creating their own glossary. When they hear these terms, write it down so you know you can learn what it is. And that's one of their hesitations and their obstacles with this. But the other thing that they struggle with is the confidence level, because sadly, a lot of people, they want the instant gratification, and it's tough. It doesn't come instantly. You have to learn the skill, get comfortable with it, and then as you get comfortable with it, all of a sudden the pieces start falling in together, and and it's consistent. AJ, you said it on our call yesterday about some people just come and they'll watch a show. They'll watch one of our webinars, maybe the AJ Brown show, and then they don't do anything all week long. You have to apply yourself, and it's a learn as you go thing. And when you learn as you go, you also earn as you go. So,
yeah, one of the things as well, Sip, is, with the whole taking on options, all of the different platforms now have simulators, right? And so if you're gonna learn a new skill, the best thing to do, just like when you're learning how to fly an airplane, is get yourself into a simulator first where you can crash and burn and nobody gets hurt and your portfolio stays intact. And so we really condone using that simulator, not just for folks that are beginners, but even advanced folks for other reasons, because you can simulate your trade plan and stuff. And so I don't know any other, whether it be an investment or a business opportunity, where you can actually try it and do it and get good at it without having any risk. I mean, I just was looking into franchises for fast food restaurants, and you have to commit hundreds of thousands of dollars just to get into the game. And with this, you can be learning and doing. And, people have such a fear of failure that they get into this analysis paralysis mode where they try to learn every nuance. And I'm almost like, since you have the simulator, get in the simulator and learn by doing. Actually get in there and do it and discover what you don't know by crashing and burning, but crashing and burning in a safe way where there's no risk. So that's one of the big things too, is that people have been so programmed by the way our education system works to not fail, that they're so afraid to just get in there to do, even knowing that they've got a safety net, that they're in a simulator, that they can't get hurt.
Yeah. Well, thank you for your input, Coach Jay. I think the biggest takeaway that I've had from just working with AJ, working with Trading Trainer, is that instant gratification. I've worked with a lot of different trading educators and trading programs, and I think that's just a human characteristic where, people, I've heard these stories that people make money. I'm going to sign up, I'm going to invest, I'm going to make all this money. But that's just not the reality of the investing world, right? Like, in order for you to make money, somebody has to lose money. And I think that's one of the values of Trading Trainer, working with AJ, is that you've been doing this and teaching for 20 years, and the consistency adds up. And I think anybody that's getting into investing, wanting to find a strategy, it's about the consistency. It's about being in the game, and the way you, AJ, and Coach Jay, and the program lays that out for people is why we have the show, is why we go over these examples. And so, Coach Jay, we thank you for coming on. We got to keep the show rolling. We certainly can keep you, if you want to touch on some of the different opportunities we look up. But I think it's about time to move on to our trending topic of the day, AJ. And this is something that you and I have been talking about the last 2 or 3 weeks, with the power of AI and coding now just being able to produce things so much faster. You started to take your knowledge and expertise, and now you're starting to put together some software. But before we go into the software and how that works, let's talk about what the strategy and the approach is, and why a software can help do that, right? And so our topic of the day, question of the day, which will get us into the software, is how useful is retracement analysis, AJ? And maybe a little bit of backstory of what retracement analysis is.
So a lot of people look at my chart, especially on this S&P 500, and they've got their mind blown. They're like, I can't recreate this. But the scoop is you can. And the beautiful part about our software tools, and I've just now kind of gotten in with a crew that helps build software tools. I tell them what I'm thinking, and they're helping implement them in the different softwares. They make it so that you don't have to spend all the time and effort. So software, in my mind, even the AI things, it's all about time saving and efficiency. It's about getting the same thing accomplished with less effort, less errors, and in a faster amount of time. So if I start to strip this chart back, and these drawings, I actually spent a lot of time myself doing, because I know how to do the analysis in my head. But this analysis is quite error prone. And if you don't do it right, it won't tell you whether the market's up, down, sideways, or whatever. And a lot of people say, well, how do I create an AJ when I'm on my own? After all, our big goal at Trading Trainer is to teach you how to do it all by yourself so that you don't need us. You don't need to rely on us. So what I'm going to do is I'm actually going to strip this retracement analysis back to just a naked chart. And what we created for everyone, Sip, are you ready for me to actually release that?
Yeah.
Okay. What I created for everyone is a study, and right now it's available on Thinkorswim, which is kind of the most common. It's the most common option trading platform, but there are others, and we'll be releasing it to other charting platforms soon. I created a indicator that tells us exactly when the confirmation happens. So let me go into this. You can see these little arrows. And so you can also tweak this if you don't want to use the 3 and 5 day exponential moving averages. They've got all kinds of different moving averages, but it's set up with our standard. And it even has a reversal filter in it, because a lot of times we get these little touches that don't actually count as reversals because it's only like a 1 day jump. So it actually, you can turn on and off this filter and get just the confirming indicators that you need to pay attention to. And so what's really cool about this is whenever you get a confirming indicator, you look back. I'm going to go ahead and go to a line on close chart because we like to use our closing prices here. You just look back. Whenever you get a red arrow down, you look back at the highest close. Whenever you get a green arrow, you look back at the lowest close, and you just connect them with a line, and that's your retracement right there. I can go boop, and I can go boop, and then I can go boop, and I can go, and the sound effects are extra. You have to pay extra for those. Boop. Right? That's our retracement analysis right there. You now know what each small move is, and you can evaluate these. You can put on your measuring tools, but everybody's been having a hard time on where do I actually draw these lines to. Now we've got our confirming indicator. It's crystal clear, and it's something that, there's no errors in this, especially when you turn on the filter.
And this is a tool, because I see you working on it now on the SPX, but this is applicable to some of the other names that we cover.
Any symbol is chartable, you can apply this tool to. And so you can see that it's going through, it doesn't, you don't have to have this. I have this little MACD chart down here to just help me make sure it's doing what it's supposed to be doing, but it's been spot on. We've been testing it for the whole week here. So, you just follow the arrows, right? And,
all right.
And draw your lines. In fact, anybody who grabs this, we're going to be, it looks like within about 3 or 4 days, Sip, we're actually going to have additional arrows where you exactly draw the line. They didn't get it in time for this show, but anybody who grabs this indicator, you'll be able to come back and grab the revision in about a week's time. You should definitely check in, because you'll be able to grab that one, and it'll show you exactly where to draw the line from, not just the confirming bar, but also the bar where you draw your line from. And that's going to really save us some time.
All right. So the link to that is in the Trading Trainer web portal. So tradingtrainer.com/white-papers. I just went ahead and threw the link into the chat. So feel free to head on over there and sign up. That's awesome, AJ. I'm excited. We go through a lot of this analysis and retracement stuff on a week-to-week basis with our examples. So hopefully maybe in a few of these we could see, if it confirms any of our
as it progresses.
Exactly. And so let's keep the party going. Coach Jay, thanks for sticking around. We're going to get into the good stuff now. So AJ, we've talked about the market as a whole this week. We've talked about the value and the popularity of using options in a choppy market. Let's put all of this into an example of how you can take it and make some money off of it. So let's discuss your pick of the week, and that this week is Verizon, ticker symbol VZ. How can we take all of these concepts and apply it to Verizon to generate some income for us?
Excellent. Let's take a look at Verizon. And Coach Jay, by the way, if you have any thoughts on any of these tickers, maybe we'll let you give some insights as well.
Oh, sure.
If we take a look at Verizon, Verizon is currently testing this level of support that it tested a couple of times before around the 32.50 zone. Now, we haven't gotten our confirmation yet that a bottom has been found, but when it does, this is going to be a great opportunity for us to do a few different things. Now, first of all, if folks are short Verizon or they have some back month deep in the money put options in place, they'll be able to write some puts, which basically means they're going to sell puts for income. And that should happen when we get the confirmation that a bottom has been found. So that's option number one. Option number two, this is also possibly a great opportunity to buy some Verizon. And again, it's got a nice dividend, right? So you might want to own the stock and have this in your portfolio for the long term. Verizon's been a company, they're one of those mainstream companies out there that's been there for a while. So it might be something to pad your long-term investment portfolio with just for the dividend purpose. Or if you want a little bit of a less expensive option, you can buy a deep in the money, far out in time call option. Usually you can get those for about a half price. And so you buy some of those and you'll be set to sell call premium at the next time it tops. This is called legging into one of our premium selling positions. And finally, if you have some flexibility and you are thinking about adding Verizon to your portfolio, but you want to get the best price, we've been talking about on this show using cash secured puts. So this is like doing a limit buy order and getting paid for it, right? So you pick the strike price you're willing to pay to buy this stock. So maybe it's $32. So I'm going to jump over here and I'm going to look at some of the options. So let's look at the October 20 expiration date. And let's look at that $32 strike price. If I go ahead and sell this option, now I have to have $32 per share ready to buy this. So if somebody says, okay, I'll sell it to you for $32, you got to have money in your account to buy this, right? Because that, even if you had a limit buy order, you would need to make sure you have money ready to go. So you're saying I'd buy this at $32, right? And so in order, by placing this trade out there, you're actually going to get 59 cents a share immediately, right? You actually get that 59 cents a share. And if nobody decides to sell you that Verizon share of stock for $32, you get to keep the 59 cents, right? And you could do this every month until you get the price that you're willing to pay for Verizon. In the meantime, you're getting these little incomes. And remember, it's in lots of 100. So options work in contracts, which are lots of 100 option shares. So you'd actually get 59 bucks. So you get 59 bucks. And, you know, if somebody wants to sell you their stock for $32, great. The thing is currently going for $30.56. You'll get it at a 56-cent discount. And in addition, you can apply, it's now 60 cents. You can apply this 60 cents and wind up reducing your break-even price even more. So if you're in the market to buy stocks, I would never understand why anybody would just do a limit buy order when you can buy stocks this way, right?
So the consensus here is you're looking for it to find a bottom and move back into the up direction.
What about you, Coach Jay? Do you see anything on Verizon that gets you excited or that you have some warning flags about?
Oh no. I love the idea of the cash secured puts. When you shared that with us and me, it was like an eye opener, and it is. I share your surprise or emotion in that. Why would you do just a basic limit order any other way? It's a great way to go, as long as people need, the beginners need to understand that when you sell it, one of two things is going to happen. If nothing happens and you don't get exercise, you're going to keep that money. But if you do, you're going to end up walking away with the stock. It's basically a win-win. So
Love it. All right, AJ. So that's your pick of the week. Verizon, ticker symbol VZ. We've got a few more that we can run through. Apply these strategies.
Coach Shay, not Coach Shay. Sip, can we visit GM?
Yes, that's on the list. That's one we've been talking about. It's one that's in the news. I would assume that the strike is hurting business, but it looks like we're finding a bottom here, a little bit of support.
And that actually brings up another topic. So one of the things Coach Jay and I are always talking about is how you have to know a little bit about the company or the ETF that is backing this underlying symbol. It's not something you can do just by a chart, right? So we always say when you're going to get involved with an underlying symbol, first of all, you have to build a relationship with it. You have to kind of understand what's going on. And we talk about a soft data analysis where you go and you review some of the headlines, you review analyst upgrades, downgrades, you take a look at what the company does, you make sure you understand what sector it's in and all of that good stuff. So you kind of have to have a backstory, not necessarily to understand how well the business is doing, but that's usually a side effect, but more so that you can paste an avatar, how you would describe somebody who is investing in that stock. Like if I picture an investor who's interested in Apple or Tesla stock, I get a different picture than somebody who would, for instance, be buying shares of General Electric or shares of some of the more boring stocks that we featured here. And so that's something to think about when you're thinking about GM and the UAW strike. I mean, Ford seems to be the one who is, working best through this strike. At least that's what the mainstream media is saying. And so Ford seems to be doing a little bit better. But, the investors still are backing GM. And I keep coming back to our visit from Serge last week. Serge pointed out this exact pattern in his analysis when he was presenting to us this past Wednesday, which usually is a bottom. And then my little indicator confirmed that it was a bottom as well. And so, my scoop out behind General Motors, and I know that I've been talking about it for the last weeks, but I'm still very much involved with having GM in my long-term portfolio and being able to sell calls at it in the future. And so I'm not taking a step back from that recommendation or observation at all. So, of course, investment advice, you got to take it with a grain of salt. So you have to do your own homework and make sure it's right for you. But I'm very excited about General Motors.
I mean, that's a pretty decent support there. If you know nothing about charts and you're just looking at it for the first time, you're looking at that bottom line like, there's some action there. Coach Jay, are you a fan of General Motors? Is this one that you've traded in the past?
Actually, I'm a fan of Ford, but same group, so it's almost identical.
It makes me think about I don't know if it's still the same thing, because I think kids today aren't as involved with like cars like they were back in the day, but there was always GM guys and Ford guys, and they'd always have this like rivalry going on, right?
And now we've got the entire Tesla crew. So a very interesting dynamic world that we live in now with the autos. Okay, let's get through. Do you want? I mean, you pulled up Ford, but let's go through some of these speed round names that we've got from viewers this week.
Let's do it.
Starting off with the first name. This is Emily from Fort Lauderdale, Florida, interested in Norwegian Cruise Line, ticker symbol NCLH.
Now, I've been a fan of trading premium against Norwegian Cruise Lines in the past. Emily, I see that, from about May during the summer months, Norwegian Cruise Line kind of came out of that channel. In fact, I had a position on Norwegian Cruise Line myself, and I was looking for this opportunity in the middle of May into June to sell premium. And then Norwegian Cruise Line busted through my thresholds for selling premium, and I wound up just going ahead and liquidating this stock when I got this confirming indicator of mine. And again, I'm excited that we've got this indicator for you to put on your own charts, especially with the filter, because these are some of the things that I've been using in order to guide my trading. And so you can see exactly where I decided to go ahead and sell my Norwegian Cruise Line initial position, because I had collected as much income as possible. And at this point, it made sense for me to go ahead and just liquidate it and take that additional profit of the appreciation on the initial symbol and run. It looks like we're reloading, Emily, like we're coming down, but here's my warning on Norwegian Cruise Lines is I would like to see a couple of tests of support and resistance before I would start wanting to sell premium or set up one of my long-term premium trades on it. Right now, I'm kind of concerned that we need to come back down to about $12 and see if $12 holds. And I'm worried about telling you whether to go long or short at this $16 range. So my suggestion, Emily, there is a great, I know for a fact we don't even have to pull it up. There's a great option chain on Norwegian Cruise Line, but right now it's kind of according to the charts and according to what I've been reading about Norwegian Cruise Lines, we're at a point here where we just need to let this mature and tell us where it's going to land and where it's going to be. And it hasn't matured yet. And it's also to determine if there's any sort of trend up or down. I mean, right now, let's let this marinate and mature further to tell us what the heck its personality is.
Coach Jay, would you agree with AJ's assumption there?
Oh, absolutely. Because you don't know, is it forming a new channel, and where we're at right now is going to be the new support? Or like AJ said, does it have to drop back down to 12 and then resume the previous channel? You don't know. You got to wait and let it mature.
I agree. That 12 is looking a little more appealing to me than where we're at now. So hopefully, Emily, that's a little bit of insight into Norwegian Cruise Lines. It seems as if that business is doing a little bit better these days. So that's good to see people out there traveling. All right, moving on to our next name. This is Casey in Bismarck, North Dakota, interested in Marvell Technologies, ticker symbol MRVL. This is one that we've covered a handful of times. Boring. Mm-hmm. It looks very boring.
It does. How does we a step function increase? So you can see it was in this channel for forever, and that's why we talked about it for forever. And then it did this guy. There was an earnings call, and interestingly enough, the earnings itself were not, stellar, but maybe they said something during this call. Maybe there was a merger and acquisition. Something caused investors to get excited and raise the price from $45 all the way up to $65. And now the question is this going to hold? Is that news fleeting? So the first thing I would do is I would go back to around this time and make sure you understand exactly what happened that caused investors. I mean, this is after hours pre-session traders. That's why there's a big gap who brought the price up. And now we're seeing perhaps, I've got this bottom here. I was thinking that maybe I had tested support and resistance around this 55 and around the 65 zone, but now I'm creeping lower. I do see that we've got a pattern that's telling us that we might come back into the channel. You know, I'm a little bit hesitant right now to tell you that you should trade this channel, especially since we dipped down lower. But if we get into this channel and I'm going to tell you to forward test it. Let's paper trade this and see where it goes. If it comes back into the channel and comes all the way back up to $65, I would actually feel comfortable after paper trading this for a week or two, perhaps even coming in here and either shorting this stock or buying a back month deep in the money put. I could then either let that thing profit if I do crash down, or if it stops at what I think might be support somewhere around 50, 55 bucks, then I can sell put premium. You can do these premium selling trades in reverse. And so you can actually make it so that you don't have to just enter in when the stock is low and sell premium when the stock is high. You could do it in reverse. And that's something we talk about in our program all the time.
Awesome. Casey from Bismarck, that's Marvel Technology. Moving on to our last name in the speed round. This is Edwin from Aurora, Colorado, interested in financial name Wells Fargo, ticker symbol WFC, Wells Fargo.
So can I tell you a quick story about Edwin? Just a quick one. Edwin was one of my original 9. When I finally got a grasp after about 8 years of doing this, I started to work with inner city, at-risk youth and teach them how to trade. And I did it in Aurora, Colorado. I was actually living up in Fort Collins. And so once a week, I would come down to Aurora, Colorado, and I would meet these kids at a public library. And we only had 30 minutes of DSL connection on the internet on the library computers before they'd kick us off. And so I had to figure out how to get them to do what they had to do for their evening trading in just the 30 minutes of library time, because none of them had home computers, let alone internet connections. This was back in 2003. So Edwin actually, continued on, and he's, in a much different position now since he's been trading for the last 20 years. And so it's cool to hear from you, Edwin. And let's talk about Wells Fargo. I like Wells Fargo. It's one of those banks that does have to pass the scrutiny. We do know that there's quite a few of those mid-sized and smaller banks, regional banks, that haven't had to meet that government scrutiny in order to, prove that they're a viable bank. And so a lot of them have been doing some, crazy things, and then investors lose confidence in them and they go out of business. But Wells Fargo is not one of those. Wells Fargo, as you can see here over the last year, is quite a boring stock. It just goes sideways choppy. And most traders, they might try to trade these short trends and things, but most traders are not interested in Wells Fargo unless they can just make a couple of bucks of appreciation. And the other traders, the other avatar might be the one who likes the dividends, and those are buy and hold traders. So this is a perfect, Edwin, you learned something back in the day. This is a perfect candidate for selling premium. And it does look like we're finding, I don't have my signal yet, so we got to wait for the signal, but it does look like I'm finding my level of support at $40. And it looks like we had a little test. So if you got in at $40, that would be buying the stock or buying the back month deep in the money call option as a substitute, a cheaper substitute. Don't worry, it looks like we're fine. This was just a little, you probably got a signal to sell premium, but then you couldn't meet your trade plan criteria. You probably couldn't get the price you needed to. And so it's basically creating a double bottom. I think I'm very happy. And if you missed the opportunity, guess what? You get a second chance at getting in with an initial position here so that we can sell premium in the future the next time Wells Fargo gets up to about $46. So I think Wells Fargo is a great candidate for selling premium against.
Coach Jay, question for you. How involved do you get in the financial names and banks, and what are your thoughts on this, Wells Fargo?
I don't get that involved in the financial banks. Wells Fargo, like AJ was saying, we've looked at it in the past, and you can see it's obviously channeling. So I just look for the channelers, and I don't focus on just a certain sector or area. I just look for the dull, boring ones and play them as they roll.
Yeah, my thoughts on Wells Fargo always come back to a documentary that I watched, and they were just like screwing their customers. And so I was just like, if someone comes out with a show about this and the business continues, I would always just be looking for shorting opportunities, but that's just a biased opinion of mine.
Yeah,
All right.
what channel could they watch that documentary on? I always liked documentaries.
I think it was on Netflix, but it was pretty bad. It was like, getting people to sign up for credit cards and stuff like that. And I don't know, but banks have their pros and cons in their life cycles, I believe. So that was definitely a downtime for them.
Well, and
all right.
you had to, as a bank, when interest rates were very low, there was no way for banks to make money. They had to come up with all these crazy schemes in order to be, especially if they were publicly traded like Wells Fargo is. What's nice, and I know a lot of people think of interest rates as negative, but what's nice about having interest rates, around the 4 or 5% mark is that banks can go back to the original way that they make money, and depositors, we could put money into the bank and actually get an annual return.
Oh, awesome. Well, Coach Jay, I think we've taken enough of your time up today. We appreciate you hopping on, coming in, giving some insights. I saw a few comments that said it's nice to put a face to the name. So pleasure to see some of the students coming on and saying hello. Once again, thank you for your time. Thank you for your input. Thank you for helping the Trading Trader community. We truly appreciate it.
Oh, you're very welcome. Thank you very much, both of you. It's always a pleasure. Take care.
Thanks, Coach Jay. Thanks for joining us for the AJ Brown Show. A little different than usual.
All right, AJ, I've got a little surprise for us. Here we go. And action.
Fireworks.
There we go. We've done it. We've pulled it off.
100 shows. I can't believe it. I mean, I guess I'm a blabbermouth.
Well, in your field, I think that's a good thing. I think people want to hear from the guy that they're going to be entrusting their money with. Not exactly, but if you were going to be putting your money on the line and someone's going to be doing something similar, I think they would want that confidence. So 100 episodes of the AJ Brown Show. We appreciate all the viewers. We appreciate all the comments. Very excited to see where we go with this new software. Even just today, going through the examples and seeing the triggers show up there. Very exciting times for Trading Trainer and the community. So as always, if you haven't become a subscriber or you're interested in the tool, head on over to the link that's in the chat. Sign up. There's a lot of great stuff in there. You can watch some courses. You can watch the workshop if you're interested.
A lot of free stuff. Yeah.
One-on-one training. That's all in there. That's why AJ did this, created this wonderful company 20 years ago to help new traders, investors really utilize and harness this power of options. So AJ, 100 episodes. Any wise words for anyone joining us in episode 101 in the future?
No, everything's good to go. Let's keep going.
All right, we'll keep going. So once again, thank you everyone for joining us. If you've enjoyed the broadcast, which I hope you have, hit that like, hit that follow, hit that subscribe button. We appreciate it. AJ, thank you once again. 100 episodes. I think for both of us, it's quite a milestone. And we're excited to see where this takes us. Thank you. Thank you all for tuning in. We'll catch you guys next week.
Catch you next week, 101.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.